This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, April 16th, 2015. Euro dollar. So right now the euro is caught between two key levels, 110.53 above and 104.62 below. 104.62 of course represents the recent 12-year low from the 13th of March, and 110.53 represents a recent medium-term lower top which comes in back on the 26th of March. At this point the market is looking to correct a little bit, though the downtrend remains firmly intact, and ultimately a lower top is sought out somewhere ahead of 110.53 in favor of the next major downside extension below 104.62 and towards parity. Sterling dollar. So cable is in the throes of a correction right now after recently putting in fresh multi-year lows at 145.65. At this point, there is risk for additional corrective activity up towards the 150 area, but ultimately only a break back above 151.65 would delay the bearish outlook. Dollar yen. So dollar yen continues to consolidate just off its recent 7-year high from earlier this year in March at 122.03, but setbacks continue to be very well supported ahead of 118, and ultimately the market favors an eventual break in favor of the bullish continuation above 122.03 and towards the 125 to 130 area further up. Really only back below the 115.55 low from December would compromise the bullish outlook. Euro Swiss. So Euro Swiss has been in the process of correcting lower since recovering to 108.15 back in February, and the market has recently broken down below 103, which puts pressure on a previous January peak at 102.50. At this point, look for setbacks to be supported into 102.50 in favor of a bounce, while a close below 102.50 would open the door for additional acceleration back towards parity. Aussie dollar. So Aussie has enjoyed a bit of a nice correction higher in recent sessions, with the market breaking back above 77. At this point, setbacks have stalled out by recent multi-year lows at 75.33, and the downtrend though remains firmly intact. Any rallies from here should be very well capped ahead of 79, while only back above 79.38 would delay the intensely bearish outlook for Aussie dollar. Dollar CAD. So a significant development in dollar CAD on Wednesday, with the market taking out key consolidation range lows at 123.50, those lows that were seen back on the 3rd of February, and opening the door for deeper corrective setbacks over the coming sessions. At this point, it's possible that the move below 23.50 could open a measured move downside correction into the 119 area, though the ultimate bullish outlook still remains firmly intact, and this break below 23.50 only delays with a deeper correction sought before eventually a higher low is seen in favor of a bullish resumption back above 28.35 and towards the 2009 peak at 130.65. So although we have seen a break below 23.50, and while this could open some short-term weakness towards 119, possibly, the outlook still remains highly constructive. Kiwi dollar. So Kiwi has been showing some signs of mild strength and consolidation in recent sessions, though the price action overall remains quite bearish, with the market locked within an intense downtrend. At this point, any rally should continue to be very well capped below 77, while only back above 78.90 would compromise the bearish outlook. SPX 500. So the S&P 500 has done a good job of staying very well supported over the past several weeks since bouncing from critical support at 2040. The market now is back above 2100 and threatening a retest and break of the recent record highs from February at 2120. If the market does break and close above 2120, this would open the door for the next measured move upside extension towards 2200 further up. But inability to establish above 2120 does keep the prospect for a top intact by current levels, and opens the door for a retest of that 2040 support. A break below 2040 would, however, be required to confirm topping and accelerate declines. Gold. So gold continues to look highly constructive as the market continues to show signs of basing after stalling out back in early March or mid-March ahead of that critical 2014 base at 1131. At this point, a break above the 1223 high that we'd seen back on the 2nd of March is favored, with the market seen extending back above 1300. Only back below 1178 would compromise this outlook and put the pressure back on the downside.